Welcome to a new episode of Opening Bid. I'm Yahoo Finance Executive Editor Brian Sozzi. Like I always say, this is the podcast that will make you a smarter investor and a better leader. Let's lead into that leadership effort or front today. Joining us now is DVX Ventures co-founder and CEO John McNeil. John, I have no clue. Well, first, welcome. I don't know how we have not spoken before. You're also on the board of General Motors, also on the board of Lululemon, spend a lot of time at Lyft. These are companies I cover all the time. Where have you been hiding?
I've been working.
It's fair. There's a lot of different places we could start this, but let's lean into what you're doing now at DVX Ventures. Talk to us about the funding environment. I think the vibe the past 4 years under the Biden administration has been tough to raise money, tough to exit companies. What's the state of play as we get ready to go into a new administration?
Well, I think the liquidity has been all clogged up at the top of the cap table, which is, if you think that I consider the top of the cap table sort of public offerings in M&A, that's been sort of at a standstill. And then that then triggers and cascades all the way down to the early stage of the cap tables, whether it's seed or initial venture or growth. And so because the end of the process, the pipe has been all clogged up, it's really obviously affected liquidity up and down the cap table, and it's caused slowdowns in venture funding and even LPs, limited partners, who are slowing down because they don't have liquidity coming out the end of that pipe. So I think everybody's hopeful that 2025 is a year that changes, and we see more IPO volume and more M&A volume. And based on early indicators, it looks like we might see just that in 2025, which is then going to, I think, open up the venture markets further down the cap table.
What is clogged things up? Is it really just regulation?
It is clearly the FTC's stance on M&A, because that's where most of liquidity happens, is bigger companies buying smaller companies to fill in product lines and provide growth. So that's been a big chunk of it for sure. But also the IPO pipeline has been clogged up, and most of that is just around valuation. Folks raised money during and before COVID at very different multiple levels than they could raise money in the public markets now. So they're opting to stay private longer. There's capital available to them in the private markets, and I think as interest rates come down, multiples go up, and you'll see more companies come out. But we've got some work to do on both of those fronts.
I've really grown up the past 20 years, John, I used to cover M&A, but there's always a big deal to be had, especially like in the healthcare space. Do you think the next 4 years things will open up to the point where we get that big transformation deal? Do large companies really want to get bigger? Are they okay just managing what they have at this point?
I think large companies want to show growth. And so oftentimes that can come through M&A. And companies like Salesforce and Oracle have been masters of that, Cisco, et cetera, in terms of driving top line growth and bottom line growth through M&A.
I think Cisco buys a company every second. I think they still do it.
Feels like that, doesn't it?
It's unbelievable. Yeah. And Salesforce has slowed down a little bit, but still, I mean, Mark Benioff, he'll do a big deal.
He's done a big deal. Like, you consider Slack and MuleSoft and others. Those are big deals that have been done by Salesforce. And you haven't seen them in the market for those big deals in the last 3-4 years.
Where are you putting your money to work?
So we're putting in what we call super cycles. We're putting money to work there. And so oftentimes an investor sees one super cycle in a career, like the internet. We've got 4 converging right now, which is a really unique time. We've got AI, obviously, the electrification of everything. Is a second one. There's autonomy and there's climate. And so all of those, each of those 4 we're investing into at the earliest stages. One of the things that's different about DVX is we invent companies from scratch. So we are not out soliciting entrepreneurs for ideas. We actually have an idea disease of our own, and we're cranking out companies at the very earliest stage in each of those 4 super cycle areas.
I feel as though, John, the past couple of years, investing in climate-focused companies has fallen by the wayside for whatever reason. But you see the wildfires out in California. Are you and your team back at the table thinking, wow, this is an area that we need to address somehow, and we could put capital to work that could be helpful, but could also earn a return?
Absolutely. So when you look at demand on the electrical grid, That demand is being driven today by two things. One is AI data centers, and the second is more and more EVs plugging into the grid. Both of those things are causing a 4% growth in demand every year on the grid. That doesn't sound like much, but when you add that up across the size, the enormity of our grid, it's a huge, huge lift. And so we've got a company, for instance, where we started and said, how could we save 40 to 50% of the energy costs or energy usage of commercial buildings? And we developed a technology that does just that. And so I think whether you put it under the moniker of investing in climate or investing in energy, um, both of those things I think end up at the same place, and that is how can we use less and therefore have more capacity available on the grid for growth for things like AI and EVs.
You sit at a really interesting intersection. Of course, I mentioned you're on that General Motors board of directors, plus help take that Lyft team public. Based on those experiences, and even what you're doing in terms of AI, do you feel like we're headed towards some form of climate event? I can't believe what we're seeing out there in California here.
Yeah, I think, when you combine like just natural weather, what's happening right now in California, but as you said, with some of the technologies that are available to us, we ought to be able to look at topography with AI and say, hey, like we've got a tinderbox here, and we need to address that tinderbox. And there are ways to do that before a fire comes through and does it for us. I think, but to your point, like I do think we're sitting on a precipice of a very interesting time when you think about the crossover of AI and autos. And I think we're going to, over the next several years, I don't know whether it's 3 years or 5 years or 10 years, but it's somewhere over the next several years, we're going to wake up and our cars are going to become chauffeurs almost overnight. And that means that each of us is going to get an average of 11 hours a week back in time that we're commuting behind a wheel. We won't be behind the wheel anymore. So we're going to get essentially a whole workday freed up to do the things we want to do. And to me, it's a really exciting thing to be at this convergence of autos and autonomy.
So I should also mention, I didn't mention at the top, you also, of course, you were the president of Tesla, working closely with Elon Musk, bringing that company to life, really. I mean, you saw help drive really significant growth there. So you're on the cybercab bandwagon. You think that's a real thing?
I do think, well, there's two forms of at least two forms of autonomous vehicles. One is cybercabs that will take you around a car that you don't own. But another is personal autonomous vehicles, and that's really where we're placing our bets at GM. And that is that you'll want the car in your driveway to drop your kids off at school, pick you up from work, pick up your groceries while you're at work, maybe run some errands for you. I think each of us is going to want that. And so whether it is a cyber cab that'll take you somewhere, or whether it's a personal autonomous vehicle in your driveway that's going to do things for you, I think we're all going to be all in on both of those.
Do you think do we actually buy cars a decade from now, or do we just rent them?
There are going to be some interesting business models emerge. I think for a lot of us, we'll still buy cars. And the reason is because I want to commute at the same time you want to commute. And so if I'm just renting, then I'm subject to demand fluctuations. And if I'm putting my own car into that network, I don't have it available for me to commute. So I think there are going to be cars that we're going to want to own in our driveway for sure. Much like an Airbnb host, they probably own their main home that they live in, or their condo that they live in, but then they have additional assets that they put out onto the network. I think we're going to see both, and I think it's going to be some really interesting business models, because the biggest question in cybercabs is who's going to fund the fleet. And for each of these fleets, that's a $30 to $60 billion question, and that $30 to $60 billion in fleet costs needs a return. And so I think we're going to see rental business models, lease business models, but I think there still will be car ownership for sure.
Well, that's a good thing. I like driving cars. Does Tesla really have a significant lead at this point on autonomy?
I think when you look at autonomy, the way that it's kind of graded is there's level 4, which means the car drives itself, nobody in the front seat. And then you go down to level 3, which means your eyes can be off the road. Level 2 means your eyes still need to be on the road. Waymo's up at level 4. Nobody in the front seat, and the car drives itself. Tesla's down at level 2. You still have to pay attention to the road. So the leader in the space right now is Waymo. Tesla is playing catch up. And it's a big leap to go from driver in the front seat, eyes on the road, to no driver in the front seat. And they're making progress for sure, but Waymo is way ahead in this race.
Where was it hard to not? I know General Motors just essentially pulled out with Cruise, saying, we're going to save on expenses. We're going to lean into our autonomy and put that technology in other vehicles. But does General Motors want to be part of that driverless future?
Absolutely, we do. And so Cruise and Waymo really were kind of neck and neck in the cybercab world, the robotaxi world. And what we decided to do was to apply that technology to our cars and allow personal ownership of those vehicles. So rather than having a taxi model, have an ownership model. And so we're applying our tech, which is at level 4 also, to our own cars. And so you'll be able to buy a GM car that will be autonomous. And that's where we're placing our bet.
All right, hang with us, John. We're going to go off for a quick break. We will be right back on Opening Bid. All right, having a fun chat here, really on the future of mobility and technology with DVX Ventures co-founder and CEO John McNeil. John, you get asked this question a lot. What is it like trying to make a quarter for Elon?
Well, there hadn't been a whole lot of quarters made before 2014, 2015, and then we started on a good long streak. I think Elon sets these hugely ambitious goals, and at the beginning of the year, he'd basically say, look, I want to double every 8 months. And we'd all look around at each other saying, we don't know how to do that, but we'll figure it out. And so what making a quarter comes down to at Tesla is really the drive and creativity of the team that's there. And we would all, on a quarterly basis, figure it out. We'd figure out how to make the quarter in the year and then the subsequent year. And we built muscle to do that in the company, but there's an incredible amount of talent there that is incredibly creative that pulls a lot of levers to keep the growth rate of that company up over the years.
Yeah, John, you were really a part of a key member there and really at the ground floor of the company. You've seen Elon juggle so many things. I mean, if someone owned a share in Tesla, should they be worried that he's also now deeply involved in government? Like, how does this human being just allocate all of his time?
He's super disciplined, and what he does is he figures out the 1 or 2 things that matter in each of his businesses, and he spends time on that. So it'll be a day at SpaceX, a day at Tesla, a day at X, et cetera, working on those 1 or 2 things. Outside of those 1 or 2 things, he leaves it to the team. And the team is incredibly talented in each of those businesses. They execute at a really high level. But he is very, very strategic with his priorities and his time, and that's how he gets a lot done. He's a really unique individual in that he doesn't have to sleep a lot, but he's also a very unique individual in that he knows how to concentrate and doesn't get distracted. And so I've seen CEOs in meetings 5 days, 6 days a week, all day long. That's not him. He really wants to know what's happening on those 1 or 2 key objectives, is involved with the teams, driving them on a weekly pace, which is part of his secret. Those teams have to present to the CEO every week, and you can bet they're bringing their A game every week. And so it's quite a different pace at those companies because the CEO is directly involved in those strategic imperatives.
Would you be a betting man that he can make significant progress in government in cutting spending? We recently had Wilbur Ross on, former Commerce Secretary, and he had a bullish take. He's like, I think he's going to cut off billions in dollars from the budget. Can Elon apply what he has done at SpaceX and Tesla to the government, given it's just a bureaucratic beast?
I think it's the best chance we've had in years. I don't remember in my lifetime an accomplished, practicing business leader getting this involved in government.
I'm with you. I can't think of it.
Yeah. I mean, we've had politicians try, we've had Al Gore try, et cetera, but we have not had practitioners try. And this isn't just Elon. This is a whole team of super talented executives from across the economy, really, not just technology, who've raised their hand and said, we want to help. Because I do think this is a once in a generation, maybe once in a lifetime opportunity for us to make government more efficient. And we all know we've all seen it in our own experience, how wasteful some of the spending is and how inefficient some of the spending is. I mean, just go spend an hour at your local DMV.
I'd rather not, John. I'd really rather
Exactly.
not do that at all.
So I'm really hopeful that they can make a big, big dent here, because I think this is the best shot we've had in a long, long time.
You also, of course, as I mentioned, on the Lululemon board. I mean, I cover retail. I've covered it for a long time. To the extent you could, take us inside of those meetings at a Lulu. How do they? This is a company. They're in China, right? I mean, they do business overseas. How are they preparing for potential trade war and tariffs? What are they working on in the supply chain? And how do you have these conversations with your fellow team members there?
I think for us, we first want to get a handle on exposure. 3% of Lulu's product comes from China, 0.3% from Mexico, and 0 from Canada. So the first question we ask ourselves is, what's our exposure? And the answer is it's very, very low. But to your question of what do we spend time on, the best companies that I've been around, whether it's Tesla or Apple or Lulu or GM, spend the majority of their time on product. Because if you have great product, a lot of things take care of themselves. And so as a board, we're hands-on with what product is moving, where are we innovating? Where's in Lulu's case, where's our freshness and newness coming from? Because we've got to continue to innovate to stay ahead, both in fabrics in terms of the kind of shirts that are stretchy and comfortable to wear, but also new lines for us, like outerwear for men. And in that process of concentrating on the product, then once you've got best product, the go-to-market gets easier, the supply chain gets easier, et cetera. But we start and end our sessions there. One of the interesting things about the Lulu board that I love, it's the only board I've ever been on, where we work out together every morning. So we're actually using the product as it's intended to be used.
That's a cool board. That's a cool board meeting. That's cool.
It is a cool board. It breaks down a lot of barriers. You're sweating together. You're seeing what everybody looks like in the morning. There's no pretension, but we're firsthand users of the product ourselves. So we can turn to a designer who's working out next to us and say, hey, the fit of this arm isn't quite right, or the breathability of this fabric isn't quite right. And they're getting a direct feedback loop from us, which is powerful.
I gotta be honest, I'd probably pay 25% more for the Lululemon men's boxer briefs. I mean, that's a secret weapon product, John. That stuff works good. But look, I mean, the stuff's not cheap. Do you think you're gonna have to raise prices? We get tariffs. I mean, maybe my Lulu underwear goes up an extra 25%, and I'm gonna have to deal with it, or just get something else.
Because again, our supply chain isn't exposed to at least the current countries that are on the tariff list. Your boxer briefs probably won't go up.
All right, good.
But it is we're working on the cost effectiveness of the product all the time. As we are at GM, like we're taking cost out of all the new EVs to get that price point down to where we've got, in the Equinox, a $34,000 EV. It's a crazy good EV with 300 miles of range. And we're taking a lot of cost out of that to make sure that we can compete not only in the US, but potentially in the future, compete with the Chinese manufacturers.
You got to get Mary Barra, CEO of GM, to get your board meetings out on some types of test tracks and Corvettes or something.
We do. So it's again, a great example of how a board is engaged at the product level. We meet at the test track and we drive the product.
Oh, wow. I didn't know that.
Sometimes 18 months before the product hits.
Huh.
And then we get the product before it's released to the general public at times and can give the engineers direct feedback there too. So it's a similar type of product feedback loop that we've got at GM and Lulu.
Maybe I'll touch the third rail here. Are you blown away by some of the technology and autos we're seeing out of China? I mean, I saw CES, and I think it was maybe Xpeng, drop a van, and outside of the back of it came like a flying helicopter that you can go around. Like, holy cow, that's crazy stuff.
I think for years people have said, hey, China are great at copying, but not great at innovating. I think that's dead wrong. I think China are proving they're great at innovating. And in the auto side, they're not only great at innovating on product, they're great at innovating on manufacturing. They've got maybe some of the most advanced manufacturing facilities in the world in the auto space. And so we are taking them seriously, and I think a lot of people are waking up to the fact that we've got to take the Chinese seriously because they're not copycatting; they're actually innovating and they're a chief competitor of ours, and we've got to stay in the race and stay ahead.
Yeah, I've been amazed by some of the technology, especially in the infotainment systems. But you mentioned the profitability of EVs. When are U.S. automakers consistently churning out profits from EVs? I mean, is it this year, is it next year, or is it over a series of years?
I can't speak for the rest of the automakers. I can speak for GM, and we've talked about this. We got profitable on a gross margin basis in Q4, and so that was a big step for us. Now the next step is to get operating margin positive. We're recovering marketing costs and the capex for the factories, et cetera. And we're on track to do that. And Paul Jacobson, the CFO, and the rest of the team has done a fantastic job there. And so GM has now rocketed up to number 2 behind Tesla in the EV market share. Clearly, scale helps to get profitability. But I think in GM's case, you're seeing a path to profitability that's as fast or maybe even faster than Tesla's path to profitability was in EVs.
Interesting. You know, John, the last few minutes of these podcasts, we like to ask our guests for hot takes. You've had a hell of a career, done a lot of different things. And I imagine working with early entrepreneurs is something special for you. What do you look for in an amazing entrepreneur? And who are some of the people we need to be watching out for at Yahoo Finance?
I think what I look for is somebody who's got not only incredible drive, but they've got a capability to be a talent magnet. Because you can't just do this on your own. You need a super strong team. And when you point to some of the the Mag 7 today, those early founders attracted incredible teams around them. You know, Larry Page and Sergey Brin had the insight to hire Sheryl Sandberg to help them build an ad business, and the rest is history with Google. And so one of the things I look for is who is a talent attractor and what do they look like. And I think especially in this era, we at DVX, that's the first thing we look for as a talent magnet founder who can take one of our ideas and businesses and scale them. And so I think whether it's in AI or even more boring businesses like services or auto repair, I've seen the same traits in those founders, and that's who we look to back.
John, we've seen a real about face. You mentioned the Mag 7, and one of those components, of course, is Meta. We've seen a real about face by Mark Zuckerberg. DEI initiatives, putting UFC Dana White on that board. What's the risk to the next generation of entrepreneurs if they follow what Zuckerberg is doing here? Doesn't DEI matter?
I got to say, like when DEI started to emerge, one of the things that hacks I was taught by a fellow entrepreneur and leader was to insist to my recruiters that at least half of my panel of candidates for a job be diverse. I hadn't done that before. That completely changed the talent I was seeing, and it made it easy, quite frankly, to hire not only best talent but diverse talent. And I remember one day I pushed back from the table. My leadership team at Tesla, I pushed back from the table, and realized I was the only native English speaker in the room. And what happened with that team was they were so creative in driving 100x growth in that company. And it's because we all came from a different spot, and we were able to come together with a lot of creativity and innovation to solve problems. And so I do believe this matters. And I believe I'm a better leader because I was taught to hire more diverse candidates with diverse backgrounds, diverse way of thinking. It just makes you stronger. And I'm not saying you don't hire the best athletes, you do, but you get them from a much broader pool than you may have gotten them from before.
Well said. We're going to have to leave it there for now. John McNeil, co-founder and CEO of DVX Ventures, also, of course, on those boards of General Motors and Lululemon. Looking forward to staying in touch. We really appreciate it.
Same. Enjoyed it. Thanks.
All right, and that's it for the latest episode of Opening Bid. Be sure to hit us with those thumbs up on all podcast platforms. We appreciate the love and support. We'll talk to you soon.